So how do LLCs pay taxes? This is obviously the big question after you've decided to create an LLC is what's going to happen come tax time. So if you are what we call a single member LLC, the IRS treats you as what they call a disregarded entity. That means that everything that the business does, all of its income and all of its business expenses will simply flow through and show up on your personal tax return when your accountant does that Schedule C form. It'll show here's what the business brought in, here were the business expenses, and hopefully at the end of the day, here were the profits or the loss that you were expected to either pay taxes on, or if it's a loss, you can claim your business deduction. Now, if you're an LLC with multiple members, this is where it gets confusing. The IRS will treat that LLC for tax purposes as a partnership. And by partnership, they don't mean the same thing that we attorneys mean when we talk about a general partnership and why that's a bad idea from a legal perspective. What they mean by that is that the LLC will do an information return that says, here's what our business brought in income, here's what our business expenses were, here were the profits at the end of our fiscal year, and then it will issue what is called a K-1 statement to each of the business partners or the members of the LLC. And that K-1 statement will say, you business partner had a 60% interest in the business, so you are expected to pay taxes on 60% of our business profits for the year. And that's true regardless of whether the money is actually distributed by the business. So it's still treated as a pass-through entity in the sense that somebody has to pay taxes on whatever that business profit was, and it's going to pass through to those individual owners. But the LLC might very well say, we're not distributing all of this money. We want to keep some of it to continue to grow the business. The other place where it can get a bit confusing is that the LLC can elect to be taxed as a corporation. And so this is where you will hear people talk about being taxed as an S Corp, or, oh, I'm not an LLC, I'm an S Corp. The truth is, an S Corp is not a legal business entity. You can't go to the Secretary of State website and create an S Corp. It is merely a tax option. And typically, the owners of the business would choose this as a tax option on the advice of their accountant. Oftentimes, what accountants will tell us is it can save you some money on some of the self-employment taxes. In some situations, it'll make sense to put yourself down as an employee of the business rather than just an owner drawing money from the business. But all of those situations mean that you sat down with your accountant, they ran the numbers, and they said, yes, it makes sense in your particular scenario to elect to be taxed as an S Corp. And most accountants I talk to, they've got a window of profits where they really like S Corps. Do it too early and you're just paying your accountant more money. And above a certain window, they say it doesn't really matter in any event, you're just going to end up paying more in taxes. So it's really a question for the accountant, but that's how the taxes work when you create an LLC.